Emil, of course, you were there when Uber was expanding into China, and you are an Uber shareholder. By default, you're a Didi shareholder. What do you make of the lackluster reception by investors today?
I don't know if it was lackluster. They raised more than they planned to, right? They exercised the green shoe. It closed above trading price. So, if it closed at 16, people would be saying they left money off the table. If it closed at 12, they'd say, they failed. So I think it was a fine showing.
So let's talk about what happened with Uber in China. Uber tried to compete against Didi in China, ultimately sold its China business to Didi, took a stake in the company. This has largely, in the annals of Silicon Valley history, been seen as a loss. You think it was a win for Uber. Why?
I mean, it's sort of simple math. We invested $2 billion in Uber China. And we got out today, if you do the math, Uber owns 12% of Didi, about $8.4 billion. So that's $6.4 billion of profit. Usually, most businesses would say that's pretty great. That's a win. I think people just, at the time wanted to show that, well, we didn't become the dominant player in China, which is true. But we decided at the time that the economics were right to do a trade where we got 20% of the company at the time in exchange for retreating from the market. And that was the best economic decision for shareholders and employees.
How would you compare Uber's, as you see it, success or track record in China to other U.S. tech companies like Facebook, which is still blocked in China, Google, which had to leave the country, Airbnb, which is still fighting?
Yeah. I mean, if you touch social networking or sensitive areas like Google Maps or Facebook, the Chinese government is going to be very sensitive about letting you on the app stores, which is why they're not in there. Uber, because we were more focused on transportation, which is a less sensitive area from a government standpoint, we were allowed to exist. In fact, many of the mayors in China that I met were excited to have us there because we would compete against Didi, which meant lower prices for consumers and better wages for drivers. But today, I think there's been a bit of a Cold War between the countries. Like back in 2016 was a much more optimistic time in U.S.-China relations. They were going to pass a bill to allow investment banks in there. But today, it's much more difficult for any company even like Uber, but forget Facebook, to be able to launch in China.
You had an interesting tweet storm about all of this. One that stood out to me, you said, while it's not fashionable for Uber 2.0 management to praise the achievements of the 1.0 team, shareholders will likely have well over $10 billion in value to attribute to the Uber China and Uber Russia teams. What do you make of the fact that, Uber 2.0, Dara Khosrowshahi's Uber, has pulled back from a lot of the work that you started, and possibly for good reasons, sold off self-driving cars and flying taxis and, moonshot initiatives that were going to take a lot of work if they ever were going to work?
Yeah, I think some of those moves were fine, like the self-driving car and definitely the flying taxi one. But I think if you're going to be a tech company and try to be a FANG level tech company, you've got to have innovation that drives new products. And if you take the acquisitions that Uber's done over the last 4 years out of it, there hasn't been as much innovation as there needs to be a generational company. And that is my criticism of how to think about really the difference between 1.0 and 2.0 from a technology standpoint.
Now, there are some people who would say Uber's never going to be the next Google. Google isn't necessarily the right comparison, but Uber's never going to be a Google-sized company. Others would say Uber was never going to be a Google-sized company. How would you respond to that?
Yeah, I would say it would have been if Travis and I were still there, that's for sure, because we would have, I think we would have seen the grocery delivery opportunity that Instacart has dominated much earlier. I think we would have actually won against DoorDash in the U.S. for food delivery, and they're a $60 billion company. That market cap would have accrued to Uber. And I just think from an innovation standpoint, we would have had a much longer roadmap. And transportation is huge. The amount of money spent on transportation, trucking, passenger delivery is bigger than the amount of money spent on search advertising. So I think there was a possibility there.
Well, it's impossible to prove a hypothetical, but we'll never know. Though I hear your point. At this stage in Uber's life cycle, what would you like to see? I mean, Uber is in a way kind of a holding company for a lot of these other bets, though they haven't necessarily evolved the way you would have liked to see them evolve. But Didi, for example, is one of many bets like self-driving cars in a broader portfolio. It's almost more like a VC.
It's a little bit like IAC, like the holding company where Dara came from. So it has a flavor of that holding company strategy to it. I would like to see more innovation. They need a head of product management. I think Dara is still the head of product management. They need to sort of get the innovation people in the game and give them license to do some things that are not sort of just shareholdings in other companies. I mean, the stock performance is the biggest measure here. IPO in May of 19 at $45, say it's 50, 10% increase, and the Nasdaq's been up 120%. So I do think, to really get back to where these other tech companies have grown, they've got to do some innovation in-house, not via acquisition alone.